All right, let's see if I can get a audio check here. See if I can hear myself. All right, I hear the old man. All right, just a quick little market review for end of week. All right, so looking at the dollar index, and if you have been following along with my analysis and commentary on dollar, euro dollar, and pound dollar for foreign exchange currency pairs, you can see we're pretty much on par with what we were looking for and expecting. I wanted to see this high over here trade to right there. And if you look at the high price right here, upper left hand corner, I'll highlight that. Okay, so 100.54, and then today we had that trade too right there as well. So right to the tick. So that's probably random. The the tweet I posted yesterday. We'll zoom in here and get a little closer look. I'll try to do my best not to make this a very long video. I'll try to do it like in 20 minutes or less. Probably closer to 20 minutes. This candlestick's high. Yesterday's candlestick, we opened, traded down, and I asked on Twitter, what is the low of yesterday? At the time, I was asking what was today, which was this candlestick at the time of the tweet. What is the low? What PD array is that? And the correct answer was immediate rebalance. So we opened, immediate rebalance to the previous day's high, and it overshot it to consequent encroachment of that wick. Actually, I just realized I measured it and then put that there so that way it comes out clear. Let me show you. From the low to the high, that wick, you can see how it becomes that right there. That's this. Okay. You can see that's the only level, and that level is being highlighted. So when price was up here, this wick went higher than that one. So this is the one you're going to grade. So it opens, trades down to consequent correction of this wick into this candlestick wick, and the immediate rebalance rather occurs right at that candlestick's high. And I teach that this is one of the strongest algorithmic price delivery PD arrays I've discovered and coined and codified, and it's mine, and you can't find anywhere else. I got to toss that in there and trust it when I can. So the idea is when you see it form like that, you want to anticipate the likelihood of the market hurrying up and running off in a direction after it trades back down to the previous high. So the way I taught it in paid mentorship was when it forms, let's assume for a moment that this wick was a body and the next candle was here. Well, that would create a fair value gap. Then we would look for it to trade down lower into that fair value gap and then go higher. But what happens when the market's in a hurry? What happens when they want to rapidly deliver to a specific price point? It's going to be an immediate rebalance. So there's going to be no waiting around, deferring the price run to get just to a fair value gap when it can just do it immediately. Opens here, trades down, then goes. Closes here, the next candle opens, trades down into this wick again, rallies up and hits the target I gave you guys. Okay, trades right to it. Look at the delivery and how strong that was. See how strong that is? So if we know that, give me 1 second here. I don't think I linked the X with the live stream, so I'm going to try to do that now. I apologize. This is the stuff that it should be popping up on my X feed now. Should be. There you go. All right, so now you guys are invited if you haven't already discovered I'm on. So look at the magnitude and speed at which price runs to the target. Okay, so again, my question to you is this. Was this an event where selling pressure evaporates and buying pressure kicks in and goes right to the tick of the level I said it was going to go to and perform immediately after it does this? It delivers the strong run right to the target based on my immediate rebalance. Because if you're going to be fair, okay, if you're going to be fair, this is pretty precise. It's immediate feedback. That's why it's the strongest PD area I have, because when you see it form, it's a gift. It literally is telling you, okay, this train's about to leave the station, and if you're not on board, you're going to miss it. Now, when we're applying it to markets like this, and it pans out perfectly to the tick, does exactly what it's supposed to do, exactly how it's coded, how it's designed to deliver. These are like those little hub conversations. If we were talking face to face, I would be like, look at this. Convince me that this is buying and selling pressure. You're going to have a hard time convincing me of that. But when you take a step back and say, okay, let's suspend the disbelief of classic interpretation of it's buying and selling pressure. What's the alternative? It's rigged. And if it's rigged to the gills, well, guess what? It's going to do certain things that's going to repeat. Otherwise, what methodology is it following? If it's rigged, if it's scripted, there has to be some kind of standard operating procedure, some kind of mechanism that it follows. Otherwise, it is a random market. And there is no such thing as a random market. So, why is it doing the things I'm saying? Why does it deliver exactly as I outline it should? Not in hindsight. I'm telling you before it does it. How to anticipate it, what it looks like, the criteria. Now imagine this. Young Master Huddleston in 1996, and I'm watching commodity futures, currency futures, the dials. That means like pound futures, Australian dollar futures, Swiss franc, Canadian dollar. And they're doing these things. And I'm watching it tear off and going right to a level that I'm outlining. I'm like, wow, like this is wild. Like this is incredibly insane. Like I'm getting really lucky. Like who has this much luck? Like I mean, how could anyone be this lucky and this consistently able to see what it's going to do based on this little behavior here? Now, when we're looking for moves in price action, the best thing we can do is try to time a directional run. And if you have a skill set, if you have a model that focuses on that, this is one that you, regardless of what you trade, I don't care if you don't like me. I don't care if you think there isn't an algorithm. Okay. Please listen to me, because as much as you may not like me or don't believe what I'm teaching is valid or whatever, and again, if it's somebody else's stuff, pull out the book, the source, the video prior to 1996, where it's extremely detailed and taught the way I'm outlining it here. That's all we're asking you to do, but nobody ever able to do that. But if we can anticipate price runs like this, and we can anticipate them being directionally driven, this is one of the biggest tools to have in any trader's repertoire because it will supercharge your trades. It will give you that rocket fuel, that get up and go, the Speedy Gonzalez, effect. It's just immediate, it takes off. Now, the caveat is the day it forms, it can do it, or it's immediately the next day. And it's real easy to remember that because it's the immediate rebalance. It happens immediately. And if it doesn't deliver a strong protraction, the next day it will. And all of my paid mentorship students, all of them will tell you that's exactly how I taught it behind the paywall. And again, here in front of everybody, you got to see exactly what I was doing for years, every single day, except for holiday weeks behind a paywall. That's why nobody came forward and said, ICT's a fraud, he can't call the market, and none of this stuff works. In fact, what they were doing is they were guarding it like the Holy Grail. They didn't want anybody else coming in. Every new membership was like, don't bring any more people in here. Don't bring any more people in here. They wanted it for themselves. And they watched me do these things every single day, every single week. This is where the market's going to go. This is what the market's going to do. This is what it's going to. That's how it's going to behave. It's going to go here. It's going to go there. And you got a taste of that this week. Isn't it fun? Isn't it fun? It's fun because it's like you feel connected to price action because you're borrowing 34 years of experience and it doesn't cost you anything. I have a clean conscience. You love being a part of the community, and no one's expecting you to do anything except for do your best to learn. Take your time. Don't be in a rush to try to make it work in a real account or a funded account where you can risk money. Take some time, study with it. Every model, if you employ immediate rebalance, no matter what school discipline you use to trade, this is one of the strongest things you're ever going to find, and it's never, ever, ever going to stop working. It's never going to stop working. Okay. I promise you that will never stop working. But what happens if it fails on day 2? Charter members are like, let me get my notebook real quick because this is something new. If day 2 fails and it trades below immediate rebalance, that's a complex reversal. It will not run and protract the upside. It'll go the other direction. Ooh, yeah. How about that? How about that? It was for free. No upsell, no charges, nothing. So anyway, real nice price delivery there. And what do you think the euro did in response to this? Well, let's take a quick look at euro. I'm already doing too much talking as it is. So here is the euro. Let me put the levels on so you can see what we were looking for. Right. Now, originally, so that we were keeping in honesty, when I first started looking at the currency markets, because I hadn't looked at them over almost like a half a year, over 6 months it had been. And because I hadn't been in sync with the market, it takes a couple days for me to get in sync with it. And I originally wanted to see if it would challenge this high. And I said, it's not about being right or wrong. I want to hold one side of the marketplace with the initial conviction that this is what I'm going to look for. I'm going to look for signs. Does it want to go up there? And it's not about being right or wrong. It's not about being in a trade. I need to get in sync with the marketplace. And it wasn't able to do anything like that. Okay. And eventually I said, okay, well, we're going to probably run for this low here. And if it gets overzealous and goes lower, it's this one here. Now, it wasn't on this rejection block where I have it. It was on this. Okay. So those are 2 levels that I told you about. And now go back to yesterday when I said that we had formed a immediate rebalance on the low of yesterday's daily range for dollar index. And if it's immediate rebalance, that means it's going to go higher sharply yesterday and today specifically. That means you have an easy shorting opportunity on euro dollar, on pound dollar, on Aussie dollar. Every currency pair that has the dollar is its second currency in its name. Go through all your Forex pairs, you'll see that's true. But the beautiful delivery in euro dollar is just wonderful. You can see it delivered just as you would expect. Right out of the lecture notes of paid mentorship 2016, 2017 up on the YouTube channel. So we used the inversion fair value gap here, consequent encroachment, it broke down, rejection block trades to it there, and then displaces down. Well, now we're down into the sell side on the heels of an immediate rebound yesterday. Real quick, let's run into pound dollar or cable. And I told you I wanted to see this buy-side balance, sell-side efficiency change its characteristic from a bullish PD array when it's in discount to I want to see it railroad through that. Then once it goes to the low of it, then stay out of the upper half and then make a run into these lows. That's what I want to see. Okay. So this one's a little lethargic, but overall, I think we're still on point with what may or may not happen. I suspect that this is a market maker sell model, and now we have a real nice second stage distribution underway. So next week, it should be pretty easy for it to get down closer to this low and that low, and we'll watch and see if that's in effect true or not. But in and of itself, beautiful delivery between the dollar index, euro dollar, and pound dollar. And let's go into crude oil. We have a bullish close here, and we went above the body open here on the big run-up day. And now when you have a wick like this is what you're going to be doing. You drop your fib on, and you put all of your levels on. Quadrants and the octants. Okay, bum, bum, bum. And then there's your levels, okay? So now what we want to see is, does it have the ability to get up to consequent encroachment, which is the midpoint of this wick? It needs to close above that. If it closes above this, that's the green light go that it is okay and green lighted to make a new higher high. Until then, all we're doing is seeing if we can get to that midpoint there. Okay. If it heats up over the weekend, and I think there's a lot of things that are probably going to happen this weekend. And if you're in the United States and the UK, you're probably going to see things pop off. Just be careful, keep your head on a swivel. But based on the intensity, if at all, and then I might be wrong. Maybe it's going to be a quiet weekend, but just where they're having all the issues over there in Iran, Israel. Maybe that'll just be the central stage of where everything goes on. But if it intensifies over there, we may see another gap higher opening on Sunday, and then who knows where it goes to. Okay, but right now, whenever we're working with wicks like this, and we're below it, we want to see it try to first get to consequent encroachment and overtake it on a closing basis. If we get that green light go scenario allows us to then anticipate higher high. Okay. All right. So what else are we looking at? Gold. All right. So I told you this is the range I told you that we're going to probably see it struggle with in here, this gap. And for the most part, we just meandered around and then finally broke lower. I still think that gold longer term will outperform on a uptrending basis over silver. I think silver is going to be manipulated lower because of, well, just study the Hunt brothers in 1980 and you'll get the gist of what I'm anticipating. So we went a little bit lower here. There's a small little pool of liquidity there. And then going back into this, we have a volume imbalance. We already used it here, but this is what you want to have on your chart. If we break lower in concert with the silver market, anticipate that level there. I'm going to change that to just a gray hue because I don't want to have any kind of directional importance attributed to it right now because it's just a draw on liquidity. So we're here. I think we'll draw down into the high of it, the minimum. And then you have a rejection block, which is this down close candle there, that closing price. And then the sell side below that and the full range of the volume imbalance there. That's as far as I can see right now. And it may not go there. It may not even do that at all. But I would anticipate it trying to do that. Moving over to silver now. This one I do see this one wanting to go lower because I think there's going to be some tomfoolery here. Okay. And I think this discount wick, we need to grade that. And all I'm going to be focusing on here is just the midpoint, which is consequent encroachment, 50 level. I'm not concerned about the other levels here. Why? Because I want to see, well, I don't want that there, the top and bottom one of it. So this level here, I want to see, does silver want to draw down to that? Now, everybody wants silver to go up. The problem is, for it to keep going up like that, there's not enough silver to meet the purchased contracts. So anyone that wants to take delivery of silver, they don't have it to supply. So I suspect, this is what I'm expecting, some tomfoolery where they'll drop the market lower by manipulation, the same way they were doing it in 1980 against the Hunt brothers. And if it does go lower, I want to see it overcome this price here. Because if it does and closes below that, we're probably going to go back down into the 50s. And it could happen quickly because that will allow the contract to settle for March delivery. And then we roll into the next month. There's a lot of purchased contracts on silver with the expectation of receiving the delivery of it. And there isn't enough to meet that demand. So what do? They play games. And I'll just leave it at that, okay? I might be wrong. Maybe you guys could get to look at me and laugh and say, this thing went up here so high and we need a higher high. Okay, great. I'm not personally in it, okay? I'm not shorting it. I'm not long. I just think it's under crazy manipulation right now, and I don't want to risk my own money in something I know that they're in there messing around with. And I don't want to be caught in a range like this on the wrong side, either higher or lower. And it can happen like that. Okay. It's a very dangerous, volatile market. So just be mindful of that. Okay. All right. Now, then we go into ES. So we'll go into the micro contract, keeping in sync with what I've said I would be doing this year. Just using the micro. As if the coach is telling you to use the micro and you see me demonstrate it with the micro, then hopefully the influence is that you'll practice in your demo account with the micro and not the mini. And that's over leveraging right now with the volatility that we have. So we have this low here, this low here. So we have relative equal lows. And what I have done here is I graded this, and it's the consequent encroachment level in purple, and then the lower octant and quadrant, and then the low is, as you see there, which is slightly above this candlestick's low. So we already have a close below the midpoint of this discount wick. That implies that there's likely continuation lower. I want to see, and I anticipate and expect, a gap lower opening on Sunday. And I want to see it remain heavy until it takes out that low. Then it can do some kind of a gap, back into whatever it opens up, and that's fine then. But I want to see it open lower than where we closed and just stay heavy right from the opening and then run for this low and that low. And what we do once we do that remains to be seen. I don't want to go out and say it's going to be a lower gap opening and go, break lower and just keep on going and never even do anything as a retracement. I don't want to go so far as to say that. But what I am anticipating is they open it lower on considerable weakness based on what we've seen here, and then no real immediate interest in going into a gap closure or even a partial gap closure. Just open straight on Sundays, open and just go lower, take out this. Or best case scenario would be to open up simply just below it. And then if that happens, then I would expect some measure of a retracement to try to close the gap halfway minimum. And then if it rolls back lower, then it's probably going to continuously keep going lower. Okay, so that's my bit on ES. And now we'll go to micro Nasdaq, and we'll finish this video up and head on into the weekend. So here's the daily chart for March delivery micro E-mini Nasdaq. And we have a discount wick here. And we have this wick here. This one is lower than that and that and that. So in close proximity, past this wick, we have this one. Well, we traded through it. We closed below that. Now we can take our fib and measure that. So now what we're going to be watching for is, can we get below the midpoint, which is consequent encroachment of this discount wick? It needs to close below that. Now, I think we're going to probably open below that. I kind of anticipate that happening. It doesn't mean I'm right. It just means that I'm expecting that to happen. And if it does that, again, I would like to see it really try to make an aggressive run towards that low. And then how we trade at that low determines what my next point of interest and where I think we're going to trade and how we're going to trade once we get there. But right now, this is what I'm looking for, a run below this low. And now we're met with a Sunday gap opening scenario. So it's weak here. And it's just like them on a Sunday. When the market starts running on a Friday, they open it up gap down. So that way you lose a lion's portion of the move and you're too scared to jump on board because you're afraid the gap's going to be closed. So it leaves you with a, I don't want to do anything, I'm scared, I should have did it last Friday type mentality. And then they just open it lower and then rush down to get that liquidity below that low. And then we had to weigh out whether or not the measure of selling to that low was warranted to see continuation lower, or it goes there then to retrace back into the gap and then look for a later move lower. I'm not bullish on stock indexes or indices. I'm not. Okay, so just a wonderful little opportunity to anticipate these types of things happening on Sunday. Again, I might be wrong. All right, and I showed you today. This was Monday's regular trading hours opening range gap. The high of it, the low of it, and these are the gradient levels, which is the octants and the quadrant levels. Beautiful little run in here. I tried to maneuver the stop loss for the position I took today on micro. I did 2 entries on it. Actually, I took 2 trades, but the second trade I did 2 entries on it. And I wanted to update the stop so that way I can roll it down. And if you look at the very last portion of the recording I put on my X feed, TradingView's paper trading account. Yes, it's paper trading. I am not a licensed trade advisor. I'm not a CTA. I'm not going to give the Commodity Futures Trading Commission my entire trading plan just so I can be considered a certified trade advisor. I have no business, even worrying about any of that stuff. I'll talk about it in demo. I'll talk about it in paper trading account. I'm not giving you trade advice. When I show you an execution, unless I show you it's a live account, and I've done that with AMP. I've done that with Ameritrade. I've done it with E-Trade. I've done it with regulated brokers. I've signed into my brokerage account. I showed every single day, scanning through, showing the exact results of it. So I don't know why you guys make a big deal about this. I love teaching, but I have to do it in a way in the United States to protect me because everyone's litigious. That means everybody's out to sue somebody, and I have a lot of fucking money. Okay, so I keep all of you at bay by simply always talking about a demo account. When I did my paid mentorship, it did not have, I'm going to teach you how to trade. It was, we're going to study price action. And I made everybody sign that agreement. They understood that I was not teaching them how to get into a trade. I was not going to give them signals. I'm not going to do any of those things, but we're going to watch price action. And they learned how to read price action. All of my students, okay, that's what we did. That's what we're doing here, okay? So, but for whatever reason, TradingView is having a lot of issues in the last couple months that it either doesn't want to work, you can't access it, or as you see in that trade example, I'm trying to move the stop loss. And when I did, it was like it was opening up a bracket of stop loss and target moving in. You'll have to see what I mean by watching the video on X. But after that, I said, you know what, I'm just be done. I closed the trade. So I couldn't manage it lower. I wanted to trade lower. And I wanted to get down into these levels here, not so much down here or here, but I wanted to have it a little bit lower run. And I just wouldn't let me do it. So I said, I'm done. I'll just close the trade where I closed it. But long and short of it is, it was a really nice run because we used Thursday's first presented fair value gap as a run to create the high of the day. The market trades down, rallies back up again. The bodies can't overtake the high of Thursday's first presented fair value gap. We start to roll over, and we take this right here and just shift the market structure right there. Once that happens, I'm going to trade inside these 2 price points here. And the first one that it gives me, I'm going to take it and enter a short. I know that we're not going to go back up in the first presented fair value gap because we have a shift in market structure here. So it's kind of like a pseudo model 2022. Went short and then anticipated lower prices a little bit strong. I wanted to see it sell off stronger than this, much more pronounced, much more significant sharpness lower. But it wasn't doing it. It was a little too uniform. You can see a lot of the back and forth in here, keeping these candlesticks real tight in the previous range. And I had my stop loss just above here. And I'm sure when we were watching it run up there, it was probably one of those things where you're like, oh, he's going to get stopped down. Whoops, I got you again, didn't I? So what that was, this is the order block at the bottom of an inversion fair value gap. That's kind of like a big brick wall. If you didn't write that down, you fucking missed a beautiful piece of information right there, because you're all begging me, teach us how to use stop loss management and trailing stop loss, because all of you want to jam the stop loss in there. You want to lock up all this potential unrealized profit and not even consider the likelihood of the volatility that we're in right now. And you're going to see these types of runs. If you're strangling it, you're not going to give the trade enough room to breathe. And long and short of it is, it just started to dump, and I had an interest in wanting to roll the stop and end up getting out inside of this portion here, which is first presented fair value gap and an inversion fair value gap. So I got a question on X. I had a blue rectangle over top of this right here. Okay, so it kind of looked like this. See this little volume imbalance right here? I'm using the body close down to that. So this is a suspension block. It looked just like this, but it was in blue. So this is how it looked on the recorded trade. Okay, right. It may have been a different kind of blue, something to that effect. But visual order, we'll send that back like that. So it kind of looked like that a little bit. So what I was anticipating is when price is up here, give me an opportunity to go short, and adding to it, this here, that candlestick right there, I'm viewing that as my first presented fair value gap. But look what I have immediately after that forming. I have this buy sign and bounce, sell sign efficiency. So I have 2 of them conflicting, and they're nested together. They're both sides. So now I have to do what? If I'm short up here, I'm looking for price to go down into this there. And I want to see this be a draw for a target while I'm up here shorting. I want to see it draw down into that, and you can see I get in near the low of this range. But once it does that, I have to take a little bit of heat because it may want to retrace out of that. But I don't believe it's going to go up into this area here. And you look at where my stop loss is, it doesn't get to it. Got real close to it, probably scared the shit out of most of you, but you have to know what you're looking for. Now this, because we have this run here, I can take this focus away, and you'll see in the recording, I do that. Now what I want to see is I want to see the market trade lower like it does, and eventually break through. And because of TradingView's bullshit paper trading account glitches, I couldn't update the stop loss. So I was like, okay, well, I'm just going to be done with it. And we have a wick here that's a discount wick. When we're down here, it's going to trade up into that. This is going to be treated as a breakaway gap. Why? Because we came up when it should have, if it was going to be bullish, it should have just ripped right on through and into this inefficiency here. And this should have resumed as reclaimed bullish fair value gap if it's bullish. My interpretation was this was the target for the short. This was a bounce in a bearish market. My stop loss guarded me. I knew exactly what I was expected to see. You see me executing with it like that. It starts to sell off. It tries to run out of it a little bit, goes right up to the discount wick here, which is a premium array while we're down here. Like, so in other words, we're at this candlestick's opening. Let me roll over it with this. When this candle's trading down here, that wick is above where we're at. So this is a premium array, even though it's a discount wick because it's the wick underneath the candlestick's body. It's going to trade up into that. And look what it does. It's using it here, here, and the bodies are telling you, I'm only reaching there. It's just doing the damage. But look what it's doing here. It's giving you a swing high. Look at the bodies, not the wicks. See the bodies? High, higher high, lower high. There's your swing high, and then displacement lower. After the third candle closes, immediate takes off to the downside. Rips through the bottom of the inversion fair value gap because it's a bullish fair value gap here. It should not now trade up in the upper half. It couldn't even do anything to get back into it. And it just kept wilting lower and lower and lower into a fair value gap here. Institutional order flow entry drill. Right there. Sells off. Same thing. Look at the bodies. High, higher high, lower high, swing high. Drops aggressively. Trades down, falls short of this octant level, trades up here, falls short of that octant level, and then breaks lower. We want to start seeing it fail to touch these gradient levels. It doesn't touch it here, falls through. Touches it here, breaks out of it. Once it goes below here, that's a done, like you're done. Like you don't need to do anything more. But if we were in a market that was not seeing so much manipulation, this is where you could just let it stay with the runner and see how much you can get out of it for the rest of the day. But look what it does the rest of the session, in the PM session. Look what it's doing. Meandering around. Nobody wants to trade in this. None of this stuff is exciting to anyone else. And we get up back inside of it here. Look, that's using that level, the low of it. The white box is Monday's regular trading hours opening range gap. New week opening gap as well. And then we have price just meandering around in no man's land there. But it closes on the low of the day. Beautiful, isn't it? Isn't that beautiful? So all in all, I could have had a bigger example to show you on that trade. I saw a fella, and I know he's deleted his tweet since making the post, and I'm not making fun of you when I did this today, but I snatched his tweet off of my timeline, copied the link, and then I posted it while I was doing the trade, and it was saying something to the effect that my first percent fair value gap failed today, and my consequent encroachment of the regular trading hours opening range gap failed today. And this year, if you haven't already noticed, I'm smashing sons of bitches upside their head with concrete blocks, okay? And I'm begging them to say some shit. Because when you do, and I'm not saying this person meant it, I just think that they're probably a student and they're struggling. They want to see certain things pan out. But I'm a hammer right now. Like I'm hammering everything that acts like a nail. And I want you to understand, I don't need to do this, but what I'm showing you by grabbing you by your lapels and I'm shaking you and I'm in your face right now. I'm saying, tell me there is no algorithm. Argue that what I'm doing right now is any other school of thought and show me what I'm using if it ain't what I told you what it was. You can't say it's anything else. You can't say this is Wyckoff. You can't say it's Elliott Wave. You can't say it's anything except for what I told you because it's sticking to the logic I taught you. I codified these things. And I want you to stop wrestling with these assholes on the internet that literally have no idea what they're talking about. And they see the same thing you're seeing here and they deny it happens. It's like they don't want to see it. They got blinders on. They're looking for something to talk about where It looks like it failed. It looks like it doesn't work anymore. It looks like it was cherry picked. When we do these analysis concepts, and I'm doing it in live streams, and there's thousands of you watching, and there's tens of thousands of you come back later on when you get a chance to see it and you watch it. They're recorded in advance. When I'm talking about the daily chart, how's that cherry picked? Like, you have to wait for that daily candlestick to complete. So it's a minimum 24 hours away. So one of the biggest frustrations I have as a mentor, because I don't give two shits really what you believe about me. I don't care. I really don't. It's actually fun when you don't believe it. But when you're a student and you come to me and you ask me to teach you something, or you expect to learn something, you need to put down all the baggage that everybody else has said, because the only thing that's going to do is going to cause you to doubt your own potential. Because I can sit out here and do this shit every single day, every week, every day, and it will not stop. I didn't just learn how to do it, and I'm not going to forget. But you, in the beginning, you don't have that confidence, and you're so easily swayed by other people because they're out there trying to make a name for themselves with gotcha drama. You don't see them doing what I'm doing. You don't see them running anything like I'm doing. I'm teaching you for free, and I love doing it. I absolutely love it, because the testimonials I get from people that have worked through it and they got good at it and they're able to make their ends meet, that to me is success. That's a testimony that I get to have. It's a treasure for me. It's a reward for me. And it's worth more than any amount of money that you would ever be willing to pay me, because I know I touched your life. And by touching your life, I've touched all of your family members. And I've made an impression on you, hopefully, to have a generous heart, a charitable heart, so that way when you see people in need, you will lay in their hands a blessing that you otherwise never would have had to give to them. And I'm trying to inspire that in all of you. Okay, so when I play the character and get people all rabble roused, that's just to get traffic coming over to my channel, because I don't advertise. I don't need to pay for advertising. I'll start a fire, I'll cause a train wreck, and people are going to come over here and going to want to look. And then you see what I did this week. Flawless victory. It's always been my MO. I've always done it that way. I want you to see me cause an issue to draw people to look. Let's go here and watch this guy wreck himself. What did he just do? There ain't no way that guy just sold the high of the day and called the low of the day. What the hell's going on here? Right. I disrupt the paradigm that you have. You think that everybody else is talking shit because you don't have confidence in yourself. You don't have anything. But you see all these people talking out there, and you're like, well, I'm just going to side with them because I wouldn't want them talking like that about me. So let me just join with them. And then you get wrapped up and you never learn anything. You end up getting caught up in the clout, in the drama stuff, and you never learn anything. So the only reason why you should be here with me, if you're part of this community, you're unplugging from all the drama. There's no reason for me to tell you that other than this is the best way for you to learn. Because I'm not trying to hide you from, because I'm out here. I'm out here on X where you can talk to me. You can say anything you want. Anybody can say anything they want to me, and everybody sees it. Who's coming at me? Who can argue with what I'm doing? Nobody. I'm staying in my lane. I'm trying to be helpful. I'm not charging anything. Sure, I'll take shots at, stuff that comes up, and if someone says something to me, I'll spar with them, but it's not mean spirited to break them and tear them down. If you're going to talk shit to me, I'm going to talk back. It's shop talk. I don't take it personal. But when you say things like it doesn't work, shit, that gets my juices going, man. Like, I'm going to come out there like I did this week every fucking day, moonwalk all over it. Like, that's why I do it. I want you to talk about it because it creates a perfect little stage where it ain't me showing off. I'm just responding to people saying that it can't be done. That's all I'm doing. And you, as the student, watch me do this using the things that I taught, the very conceptual idea and theory being applied. You can see my executions, they're not random. They're highly precise. It took a long time to get that, a long time. And I won't allow these fucking 20-year-old clowns, these stupid little shits, to go around and tell everybody that, oh, he rebranded and repackaged. $5 million is still up for, it's still up there. It's still up there. Nobody can do it. Nobody can find the source material as I'm the source material. And I'm gifting it to all of you. All you have to do is hang out, have some fun. Don't take everything so serious. I'm going to probably tweet more than you want. Don't complain to me about it because I'll mute you. I'll never see anything that you ever say again. Because if you complain one time, I see that as, okay, you're going to be a fucking irritation to me. So I'll mute you. You can still see what I'm doing. You'll see every tweet. You'll be able to communicate to everybody else. I'm just never going to see your comment because it's to me, you took time to think about writing that out and you don't have the right mindset to be here. Hang out with us, have fun, you know, shoot the shit with each other. It's fine. It's fun. But if you're mean spirited and you're just an ignorant piece of shit and you just really are exuding out, because I'll look at your profile and if I see 90% of the shit that you're saying is all just toxic nonsense, I'm brooming you. And you can pretend that you're influencing me. You're not. But I try to present a learning environment that is as fun as I can possibly make it, not be boring. If I'm not given the ICT character, okay, if I don't do that, I'm going to put you to sleep. Even with it being great content, I'm going to put you to sleep because it's dry, it's monotonous, it's boring. So what I do is I spice it up with the Stone Cold Steve Austin stuff, all the the loudmouth braggadocious stuff. I do that because you're going to be paying attention to that, and you're hoping somebody's going to come up here and say, I'm going to show you this is how it's really done ICT, and then he shit the bed and you never see him on the leaderboard anymore. So anyway, I will wish you all a very pleasant weekend. Have a very safe weekend. And until I talk to you next